traders, welcome. Today we are going to look at a very important topic in trading, which is time frame alignment. Whether you are a scalper, a day trader, a swing trader, ignoring time frame alignment is like navigating the market blindfolded. So what is time frame alignment? Time frame alignment is the art of aligning your trade analysis across different time frames to ensure you are trading with the broader market narrative. In other words, it is all about analyzing the trade across different time frames. Basically, we use either 2 time frame or 3 time frame in our analysis. The first, which should be your bigger time frame, and the last, which should be your entry time frame. So let's look at time frame combination you can use to build your narrative. Let's start by going through the higher time frames. For swing to position traders, we have the monthly time frame as our bigger time frame, the weekly as our major time frame, and the daily as our entry time frame. We also have the weekly, the daily, and the 4 hour. The daily, the 4 hour, and the 1 hour. For intraday to swing traders, we have medium time frames like the 4 hour, the 1 hour, and the 15 minutes. We also have the 1 hour, the 30 minutes, and the 5 minutes. Also the 1 hour, 15 minutes, and the 1 minute. So we have the lower time frames capping. We have the 15 minutes, the 5 minutes, and the 1 minute. We also have the 5 minutes, the 1 minute, the tick chart, or the seconds chart like 15 seconds. And we also have the high frequency scalpers time frame. So all these time frames are important when making your analysis correct. Though some traders use 2 time frames, some also use 3 time frames, and you can see some other traders who use multiple time frames that are more than 3. But I will advise you to stick to 2 or 3 time frames while making your analysis. Unless you are an experienced trader who is used to navigating to different time frames, then you have to stick to 2 or 3 in your analysis. Basically, the biggest time frame is the one that you will use to find your bigger trade. It is the one that will give you the bias for your trade. Let's assume that you are using the 4-hour chart as your bigger time frame. On the 4-hour chart, you have to find where the direction of the market is going. You have to find where the order flow of this bigger time frame is. Then you can switch to your medium time frame and analyze it based on the direction of the biggest time frame. On your medium time frame, you can use it to spot your areas of interest, where price is likely to react from. Then you can use that to build your narrative. Now, when you spot your area of interest on the medium time frame, you can then switch to the lowest time frame and wait for your entry. So that is how you can use all these time frames and combine it together to form a narrative. So let's go to the chart and look at how we can possibly align our time frame to give us a narrative. This is an example of how you can align several time frames to create a narrative. As you can see, we are in the bigger time frame and we have price approaching this high here, probably sweeping the high here. So we'll go to our medium time frame, possibly to spot our areas of interest and see if we can have a reaction. Before that, you have to notice this is an extended price in a bullish form, and we have a lot of low resistant liquidity that are resting here. So let's switch to a medium time frame to see how price will react from this point and see if price is going to come back after taking this liquidity to run all this liquidity resting here. This is our medium time frame. As you can see, the liquidity levels, low resistant liquidity levels become very obvious here at this point. It is obvious that we will have price come down this place to take most of all this liquidity. Price has taken this high here, so our next area is for us to target all these liquidity areas here. So we have price reach out for this high and take it, but can we stay here? No, we cannot. We'll probably wait for price to react and take this high. In other words, we will wait for price to run this side and create a new high. Then probably wait for a valid pullback before we can start looking for entry. So let's see how price reacts. As you can see, price has come to this area and swept around this high here. Price has run this high here. So if we are going to wait for a valid pullback, we will wait for a candle closure below the last recent candle. As you can see, we have a very big bearish candle. We have a very big bearish candle here, and we have another candle, which means here is an imbalance. There is an imbalance. We have an area of imbalance, a fair value gap. So we will mark out this area of imbalance here as our area of interest. And we will switch to our entry time frame, which is the lowest time frame, to possibly look for our entry within this range. So let's go there and see how it goes. As you can see, this is our lower time frame. We have price, we have low resistant liquidities all here, and price will probably come to run. So let's play and see how price will react to this. We are expecting to make our entry from this zone, then we take our sell signal. We are expecting to make our entry from this zone. We look for several validation, then make our entry. So let's see what happens. As you can see, price enters the zone. You can see that price first enter the zone. Then we have our price, our manipulation here. Price from here, from this candle to down. So this is not our ideal entry, but is how price aligning different time frames can give you an entry. So if you have missed an entry, you can still take your entry from this area. So this is an example of aligning different time frames. Remember, on the bigger time frame, our bias is bearish. So we switch to our medium time frame to locate our area of interest. From that area of interest, we build a narrative to make our entry on the lower time frame. So that is how you trade this kind of market. You combine different type of time frame to give you a solid idea of what is happening in the market. Thank you so much.